Morning, guys. It's Monday, July 28th, 5:25 a.m. Central Time. Grain markets are lower this morning. December corn futures down 3.25 at 4.15 3/4. November soybeans down 6 at 10.15. December Chicago wheat down 3 cents at 5.55 1/4. December Kansas City wheat down 2 cents at 5.45 3/4. December spring wheat is down a half at 6.05 1/2. We've got some rain on the radar this morning. Why don't we start there?
So rain is pushing across the central U.S. Corn Belt early this morning as a large system works its way through Iowa and into Illinois and Wisconsin. Weekend rain totals were best in southeast Iowa, central Illinois, southern Minnesota, northern Indiana, and Ohio. Looking ahead, the forecast is wet, with most of the Corn Belt expected to receive at least some rainfall over the next week. After 2 more days of above normal temperatures, a cool front is expected to push into the Corn Belt by Wednesday, bringing temperatures 5 to 12 degrees below normal for several days.
Mackenzie, the big headline over the weekend was the trade deal with the European Union. We're going to get to that in a second. That trade deal clearly does not matter. The weather is clearly what does matter. A cool August or grain fill period is typically seen as being a positive for the U.S. corn crop. If we can continue this trend of cooler temperatures, which again is slated to begin like Wednesday this week, it's seen as a positive. USDA will release its monthly crop production and WASDE report on August 12th. I believe that's a Tuesday. And in that report, they will very likely raise their estimate for the U.S. corn yield, maybe the soybean yield, but probably the corn yield based on the crop ratings and based on other factors. So the market is looking at the weather situation. Okay, we had a kind of a short-lived heat wave, but other than that, we've got no real problems. We're going to see some good crop ratings reported again this afternoon. With regard to precipitation, or I'm sorry, temperatures, we'll stick on for a second here. 6 to 10, you're going to be normal. Maybe some above normal stuff in the 8 to 14, but the trade doesn't take that extended stuff very seriously. Precipitation expected to be above normal over the next 7 days and near normal during the 8 to 14 day period. Thank you to our friends at Crop Profit for allowing us to use these maps. So the weather continues to be the big price driver here, just the weather and the idea that we've got this monster corn crop or corn yield nationally sitting out there. Again, the numbers that continue to be tossed around in the mid to upper 180s, depending on who you ask. And there are a few outliers that are working with numbers even higher than that. Could you see a 190 corn yield? Sure, you could. Anything could happen. I'm not on that page, but that's the sort of stuff that's being discussed, and that's why the market has struggled to such a significant degree. Okay, let's go to what should be positive news, but really is not.
Right. So the US and European Union reached a trade agreement on Sunday. Under the deal, which will begin on Friday, a 15% tariff will be imposed on EU imports. Additionally, the EU has committed to investing approximately $600 billion in the US and purchasing $750 billion in American energy products. US exports to the EU will not be subject to any new tariffs. President Trump said the agreement will have a significant impact on agriculture, although specific details have yet to be announced about that statement. Trump initially proposed a 30% tariff rate on the EU under his reciprocal tariff policy. As with Trump's other trade deals, this agreement serves as framework and may be revised before it's finalized.
And the grain markets go wild. They did not. Nobody cares about this. The European Union is a big trading partner. They're the fourth largest buyer of U.S. ag products. They accounted for $12.8 billion in 2024. I just don't think the marketplace or traders, I don't think anybody was ever concerned about demand from the European Union. And, you got to remember with these trade deals, they don't add or subtract bushels from the balance sheets. You could see these games of musical chairs played where if we didn't reach a trade deal with the EU, they could go elsewhere and then somebody else might come to the United States. So it is a positive headline. And do they buy some more soybeans? Sure, maybe they do. I don't know. The trade just is not interested in this. Let's go to the China deal.
U.S. and Chinese officials are meeting today in Stockholm to continue trade talks. While a full trade agreement is unlikely, both sides are expected to agree on a 90-day extension of the current trade truce. This pause would buy time to plan a potential meeting between President Trump and Chinese President Xi Jinping in late October. Without an extension, tariffs would return to triple-digit levels, 145% on Chinese goods entering the U.S. and 125% on U.S. exports to China. The meeting would give the U.S. an opportunity to ease its 20% tariff on Chinese goods linked to fentanyl. In return, China may finally follow through on its 2020 pledge to increase purchases of U.S. agricultural and other goods.
A lot of traders believe that this is the trade deal that will matter, and I think it will matter to some degree. I'll tell you this though, we still got new crop beans above $10 on the board, right? And we know that China year in and year out accounts for ballpark 20% of all demand for soybeans grown in the United States. The market is pricing in the idea that China will in fact buy U.S. soybeans and will probably be the biggest buyer of U.S. soybeans during the new crop marketing year. Because if the market was trading, just for the purpose of simplicity, if people actually thought that China was going to buy no soybeans from the United States during the new crop marketing year, the bean market would have an 8 in front of it, not a 10. So I think that the market and traders are working with the idea that, yeah, we've got a trade conflict or tensions, but China's going to come to the table and they're going to buy some beans when it makes sense to do so financially, not necessarily because there's a trade deal or no trade deal or whatever. So, I mean, that's my thought. China still doesn't have any new crop soybeans on the books, nothing from the United States. I think that's coming though. And if it doesn't come, then we've got a significant.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of last week's premium videos?
Ryan Moe was on Friday talking basis information. Absolutely just straight fire information from Ryan. Absolutely fantastic. Ryan is much more in tune with the cash grain markets than I am, and talked specifically about spreads and basis, a lot of stuff that he deals with on the commercial side of the business. It was absolutely fantastic. It's a must watch. I did a video on overnight lows, corn yields, and analogs. Overnight temperatures have been extremely warm. They were in the month of July and really at the end of June. Also, some historical extremes, especially in the central and eastern part of the Corn Belt. I went back and looked at some analog years, some years that were similar to what we saw this year with regard to just that one specific data set, which is overnight low temperatures, and talked about what happened in those years with regards to corn yields. Jim was on last week. Also, we did a beginner inflation hedge guide. So if you're maybe a younger person, maybe an older person, and you're seeking to insulate yourself from the fact that the US dollar loses a large chunk of its buying power every single year and will continue to do so for the rest of your life, this is how you can hedge that. And Jim's a professional trader, professional investor. He's been doing this for years and years and years. Some very, very good information. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation, nobody tries to sell you anything else. We don't want to talk to you. We don't want to look at you. We do want your cell phone. Well, we don't need your cell phone number. You can send it to us if you want, and we can put you on the text message list, but that's not required. We do text back and forth with premium subscribers, things about grain marketing and other questions, but we just want to send you info. And remember, guys, we lose money doing YouTube and the podcast. This is a big loser for us, what we do for free every day. So if you like what we're doing, check out the premium subscription. Help to keep us afloat. Premium subs, we love you to death. If you're not a premium sub, we love you to death also. But, you should check that deal out.
The funds trimmed their net short position in the corn market last week. For the week ending Tuesday, July 22nd, large money managers were net buyers of 8,000 corn contracts. This is the third consecutive week that the funds have been net buyers of the corn market. They were also net buyers of 26,000 soybean contracts and 9,000 contracts of SRW wheat on the week.
Just nothing here that's exciting. I mean, so you've seen what a little bit of short covering in SRW wheat, I guess, as of late. The long in the soybean market is not of consequence. It's more like a just, hey, we have no real position here. It's still an opinionated net short in the corn market. There's a lot of carry in the corn market. There's a lot of carry in the soybean market too, which that's the one thing that's kind of curious to me is this small fund long. It would be a lot easier to be short, but in any case, there's nothing here that's really exciting to me right now.
Friday's cattle on feed report was overwhelmingly bullish. As of July 1st, cattle on feed totaled 11.1 million head, 98% of year-ago levels, and 1% below pre-report expectations. June placements came in significantly lower than anticipated at 1.4 million head, only 92% of last year's levels, and 6% below expectations. Placements continue to be impacted by historically low cow herd numbers and reduced feeder cattle imports from Mexico. June marketings were reported at 1.7 million head. That was 96% of last year's levels and steady with expectations. The most striking detail in this report was the sharper than expected drop in placements, which no analysts had projected. A bullish market reaction would normally be expected, but with futures trading at record highs, who knows how the market will actually react today.
Yeah, so this is one of the strongest bull markets in any market that you'll find on any chart anywhere on the planet. I asked you before we started taping, Mackenzie, about herd rebuilding. Is there any evidence that herd rebuilding is taking place?
No, so we had quarterly data also released on Friday, and that is regarding to steers and heifers and the breakdown of like percentage in the feedlot being fed. So as of July 1st, roughly 62% of the total number of cattle on feed were steers, and heifers represented 37%. Historically, whenever the total number of heifers on feed drops below 37%, it signals that some degree of cattle producers are rebuilding their herds. So it appears that there's really no rebuilding going on. We also had the semi-annual cattle inventory report come out on Friday, and our cattle herd is still shrinking. I mean, we are still at record lows. The beef cow herd is down 1%. We just keep getting smaller. So
It's not a guarantee that we have to rally today by any means,
right.
but it's probably not a situation where you're going to drop $50 right now.
Mm-hmm. Yeah,
and that's what people were worried about. People aren't worried about like a short-term correction. People are worried like the market's going to end and that's going to be it, and it's never going to go back up there ever again. That doesn't look like it's where we're headed right now.
Right. Yeah, the fundamentals are just so darn strong.
No guarantees, guys. No guarantees.
Right.
No trade wrecks either here, by the way.
All right, moving on. Argentine President Javier Milei has announced a reduction in export tariffs on several key agricultural products. Tariffs on soybean meal and soybean oil will be lowered from 31% to 24.5%, while the rate on soybeans will drop from 33% to 26%. Corn export tariffs will be reduced from 12% to 9.5%, and select beef cuts will decline from 6.75% to 5%. Although Milei has publicly opposed export taxes, he maintains them as a necessary source of revenue to support his broader goal of achieving budget surpluses. The tariffs have been described as more damaging to Argentine farmers than plagues, floods, and drought.
This is another thing that doesn't add or subtract anything from the balance sheets. However, it could push some additional Argentina product on the market short term, which is not necessarily a positive.
China's ag ministry has warned that high temperatures and drought could threaten fall grain production. Earlier this month, the USDA's attaché office in China projected the 25-26 corn crop at 298 million metric tons, a 1% increase from last season. Wheat production was also projected to rise about 1% at 141 million metric tons. However, as early as June, concerns about drought in key wheat growing regions had already begun to surface. As a result, some analysts forecasted that China's wheat production could decline by 5% from last year, reaching its lowest level since 2018.
Okay, so China is the world's top wheat producer, and I think so 95% of what they grow in China is winter wheat. The heat concerns, I think in June, was like a kind of a pre-harvest type thing, and now we'd maybe be more on to like corn concerns at this time. China's the second largest corn producer on the planet behind the United States. They're projected to account for 23% of global production. I haven't really seen much about this aside from this Reuters story, and I haven't really seen anybody cut production estimates or anything along those lines. So I guess stay tuned, but the market clearly disinterested in this story. It's like the market's disinterested in every story aside from like the big corn yield story,
We had some more flash sales on Friday. U.S. exporters sold 4 million bushels of corn and 5 million bushels of soybeans to Mexico for delivery during the 25-26 marketing year. Exporters also sold 6 million bushels of corn to South Korea for delivery during the 25-26 marketing year.
Yep, good stuff. And we're going to need it because USDA's got a big export number penciled in for new crop corn. And we're going to need to see Mexico and South Korea and Japan and places like that continue to buy corn out of the United States. We talked about cattle. Let's do outside markets. The S&P is up 12 points today. The Dow's up 45, continue to hover near or at all-time highs. Treasuries are mixed. US dollar is higher to call it sharply higher. Crude oil is up 70 cents in the September WTI at 65.85. Have a great week, guys. We'll be back on Tuesday.